evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 18th of November here in 2021. And that right there, sneaking in, is the Nasdaq. That's our Nasdaq. We're looking at the S&P futures right here, Nasdaq, and that's your NQ. That's a new all-time high. It is actually a new all-time high when the majority of sectors were negative today. Where was the outperformance? Right here, XLK. So XLK is seen as your technology sector. XLY is seen as your consumer discretionary sector. That's where Tesla and Amazon and some other names are going to fall, which includes Home Depot. So that's a good play in today's session. So Home Depot, we'll take a look at this in a moment. But those are the leading sectors. Healthcare was flat on the session. Everything else was negative or bearish. But the title of tonight's video is the Nasdaq outperforms, and we'll come to that in just a moment. But this is our S&P 500. This is the broad market. These are the financials. Over here is considered technology, so that's Netflix, Disney, Comcast, Verizon, little communication, but they're nonetheless. Google, Facebook is in that too, but I think of all these as tech. In fact, you might think of all of these as tech, but technically, Amazon and Tesla are in the retail or discretionary, as is Home Depot. And in terms of sectors, that falls under the XLY. So let's keep that on the back burner as we look at everything else was bearish, down, even up here. Salesforce.com, Intuit, all the other products up here, Oracle. But that didn't matter because what was up mattered. Nvidia, Amazon, Apple, and Google. And you see them right here. I always keep a look when I'm trading off to the side of my desktop. The stocks that are strongest on the session, the stocks that are weakest. And in today's session, that's Nvidia and Amazon and Apple and a little bit of Qualcomm and a little bit of Google. That's enough to override all of it. Override. And that's what boosted up the tech sector. That's what boosted up the XLK. And that's what boosted up the Nasdaq. But also playing in the QQQ. That's our headline news, is NVIDIA. NVIDIA did have earnings, and we can look at what those were and how the earnings played out. And if you're ever curious about how to analyze or pinpoint stocks with earnings, so NVIDIA on the earnings, they don't have it posted just yet because this is looking into November, but this is the most recent quarter, so August. And this will be posted shortly after today in the video. But nonetheless, NVIDIA did report earnings, and they are up in the study page. You can also look at fundamentals. Just go in here and type in the name of the stock, and you can see any type of analyst estimates or earnings in the past, or what they're saying, company reports, company profile. There's the financials, the trends in earnings per share. All the things are found inside of this valuation. Anything you might need to know about any stock, and that of course includes Amazon. You can look at Amazon too, Apple, so on and so forth. So today's video will dedicate toward the technology sector. And of course, earnings there. There's Amazon. And there's some earnings estimates or earnings research reports. This is again inside the thinkorswim platform. And you can compare all through here. But nonetheless, these are pulling up the market. And one way to look at this, I like to do this from a standpoint of how big the boxes are, is how big the market cap is. And that's kind of a quick way to look at it. But notice in the S&P, we have all the things over here. In the Nasdaq 100, we don't. And this is where the domination is. The other way to look at this is through the watch list. Pull up the S&P 100, pull up the Qs, pull up the Nasdaq as well. And we'll just zoom into market cap. This is a good way to compare, pull everything else off the chart, what is going on and how the markets move. So market cap drives the Nasdaq, and weighted market cap drives both the Nasdaq and the S&P. But you see the Nasdaq is heavily weighted to the technology stocks in that sector. So when these outperform, it's like a magnitude and order greater than something way low on the market cap scale that doesn't really contribute that much at all. That's why you can have a lot of stocks in the red, but the things that matter are at the top. And here's the bottom line, or the top line if we're looking at it from this perspective. NVIDIA, Amazon, which had a strong breakout today, Apple, and I want to double check this before I say it incorrectly. Yes, Apple has a new weekly high. And just to be doubly, triply sure, this is most likely a new, take a look at the monthly chart, and we'll go back max available. And I bet that's a new all-time high. Okay, just want to make sure. Sometimes it's not. When you're scanning for stocks making 52-week highs, sometimes they will show up, but it will not be an all-time high. But Apple, it is. And Amazon, pretty sure in that one too, all-time high. Look back where it was in the tech bubble. Nevertheless, Amazon trades above 3,500 toward 3,700 per share, and Apple as well. Nvidia, not surprising, but this is tech. Here's Qualcomm. See, Qualcomm, it always is good to compare on a monthly chart just to double, triple, quadruple check whether we have all-time highs, because a lot of the tech stocks, especially those that were around and survived the tech bubble and the tech burst, Qualcomm being one of them, they had a big run in 1999, 2000, but then they fell apart. So we are now, it took a long time to get back to those highs, but 2020 and 2021, that's where we are. Google, notwithstanding, didn't really go through the tech bubble. It wasn't around in 1999, 2000, but nonetheless, it is here. So that's just looking at a few of the names. Microsoft, comparatively, that's a big run. Of course, these have been split over the years, most of them. And nonetheless, that was your tech bubble run-up and the tech bubble burst. But that's a little drop in the bucket compared to where it is now. And this is what's moving the market. Other stocks are playing into that. There's Costco, but that's not a technology sector stock. That is a retail stock. Back to the bigger picture. Here is the Nasdaq. And that takes us back to the 2010. Here are the triple Qs again. These have been earnings-based or split or adjusted over the years, but nonetheless, here we are at these highs, monumental highs. Where is the Nasdaq? Up here. Where is the S&P? Just a sliver beneath it. Once again, that is because the S&P is made up of a large number, not so much number, but larger sectors or stocks that are diversified across the sectors. So is the Dow Jones, and so is the Russell. Weakness abounded here, mainly the Dow and the Russell. But again, all eyes are focused on the leadership and the continued outperformance of tech stocks, tech names, and we even call them tech giants here in TheoTrade, or monsters of tech. Another way to look at this, in terms of focusing on the tech sector and how it affects your decisions each day, this is just a regular 6-window grid, and it's 6 windows weighted by, or at least arranged or sorted by market cap. So Apple, we'll see if we can look at these together. Apple is the number 1, which takes the top left spot. Microsoft is number 2, takes the middle spot. Google is over here. And then Amazon. These have been leapfrogging recently. So Tesla leapfrogs. So Tesla actually takes the middle spot over here, but don't get too caught up in that. The market cap goes back and forth, especially when they are so tightly together. But Apple, Microsoft, they're at 2.5 trillion, significantly outperforming the others. What is the purpose of this? When a stock catches fire, one of these names, we should say, catches fire, Apple, Microsoft, Google, Amazon, and Facebook all caught a rapid bid to the upside, rapid bullish activity, rapid money flow around the same time. That translated, let me take Tesla off just for a moment, to look at the Nasdaq, and that boosted the Nasdaq about that same time. Let's go back here. So this is the boost up in the morning section, or the morning sector. There we are. And that plays into the market itself. So S&P is not at the highs, and this is not a market that we used to be able to look at. When things are weak, in fact, we can look at one other component, and that's going to be in the S&P 500, which stocks were up, which stocks were down. This is going to be key to making a little better decisions. It's not the number of stocks that are up and down. It's not even the volume flowing into declining stocks. It's the capital. And this is multiplied by market cap. So more money came into the market today via this metric here and this S&P 500 index watch than came out of the market, despite the fact that a lot of stocks were negative. Almost all sectors were negative. But the two that mattered, technology and XLY, they were up. So pulling it back to here, here's financials coming off the high, as would be expected. Technology extends to new highs. Discretionary, remember Tesla and Amazon are in discretionary. They're extending up. And the other sectors are playing down. Energy is playing down. Staples are playing down. Healthcare is off the highs. And finally, utilities also off the high. But again, the Nasdaq is driven by technology and market cap, and to a lesser extent, so is the S&P. What does this mean for you, your accounts, your trading, and your short-term decisions? The market used to be a large number of stocks. So if you're trading the Qs, if you're investing long-term in the Qs, you are not as diversified as you might think. You are riding the fortunes and riding the risk and the reward of a small number of stocks. So something like the Russell, which is coming down off the highs, the Dow to a lesser extent coming down off the highs, they don't have the effect or the market cap weighting that the Nasdaq and the S&P do. So this is a key turning point. It's been a key turning point, but it's key to watch as we get more and more days like this where technology continues to outperform. The index of the Nasdaq and the price of the Nasdaq and the Qs trade higher, whereas just about everything else in the market is weakening, pulling off the highs, and trading a little bit to the downside. It's just a number of caution. It used to be where all stocks were similarly going in the same direction, but it's such a split or a shear that it affects all our decisions, especially for trading in index futures or any particular swing trades or intraday trades or duration trades with index ETFs. That would include the SPY, QQQ, DIA for the diamonds of the Dow, and then IWM for the Russell. So continue to watch these names if you are not familiar or do not have part of your routine to watch the tech sector or at least some of the tech giants. It would be helpful to add that to your routine or analysis or evening study or how it plays into your short-term trading decisions. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for November 18th, 2021.